Hey traders, you're welcome back to the Forex Geek channel. In this video, we are going to be diving into a simple RSI trading strategy for beginners. Okay, it's a strategy that is easy to understand and is effective in spotting trade opportunities. So I'm just going to add the RSI to the chart right away. The RSI, or the Relative Strength Index, is one of the most popular indicators, and when used correctly, it can help traders identify overbought and oversold conditions, trend strength, and potential reversals. Stick around because by the end of this video, you'll have a step-by-step RSI trading strategy that you can use right away. You can start using it right away. Make sure to hit that like button, subscribe, and turn on notifications so you'll never miss valuable trading content. Let's just quickly get started. Now, before jumping into the strategy, let us quickly break down what the RSI indicator is and how it works. Now, the RSI stands for Relative Strength Index, and it is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100 and is used to determine whether an asset is overbought or oversold. All right. For the overbought zone, when RSI is above 70, it suggests that the market may be overbought and due for a pullback or reversal. Then for the oversold zone, when the RSI is below 30, it indicates that the market may be oversold and could bounce back up. Now, a quick tip: the RSI is not a standalone signal. Okay, so combining it with price action can improve your accuracy. Okay, combining it with price action can improve your accuracy. Now let's talk about the best RSI settings for beginners. Okay, the default RSI setting, in the default RSI setting, you're gonna see that the period is set to 14 and it works well for most traders. All right, however, if you want more sensitivity, you can adjust this to 9 for faster signals, better for short-term traders. Okay, then you can use the 14 period for a balanced approach. It's ideal for swing traders. Then you can use the 21 period for smoother signals. It reduces false alarms. Okay, for this simple RSI trading strategy, we're just going to stick to the default. All right, the default 14, because it provides a good balance between speed and reliability. All right, now let us just break down the simple RSI trading strategy step by step. The first step is to identify overbought and oversold levels. When the RSI is above 70, you look for potential sell opportunities, all right? And when the RSI is below 30, you look for potential buy opportunities. Now, secondly, you should wait for confirmation with price action. Instead of entering trades blindly, wait for confirmation signals like candlestick patterns, trend lines, trend line breaks, support and resistance levels is important. Okay, so you have to plot these lines on your chart, the support and resistance lines, and you also have to plot your trend lines on your chart so that you can use these for confirmation. Okay, for example, if the RSI is below 30, okay, and let's say the price forms a bullish candlestick pattern, any bullish candlestick pattern at all, that could be a strong buy signal. Okay, so the next step is your entry and your stop loss and take profit levels. Okay, so you can enter after you have confirmed with price action that you're likely having a buy signal or a sell signal. Okay, so once you enter, if it's a buy trade, you can set your stop loss just slightly below the swing low, the recent swing low. But if it's a sell setup, you can place your stop loss just above the recent swing high. Okay, then for your take profit, you can aim for a resistance if it's a buy trade, or aim for support if it is a sell trade. Okay, or you can actually exit when the RSI reaches the middle or opposite extreme. That is, if you are in a buy trade, maybe when the RSI reaches the 70 level, you can exit your buy, or when the RSI reaches the 30 level, you can exit your sell. Now, for a bonus tip, you can also combine the RSI with moving averages or trend lines to filter out false signals. For example, we can see that I drew a trend line around here, and at this time, the RSI was giving us a sell signal because it entered the overbought territory and pointing downwards. And you will notice that around the same time, this trend line gave us a signal that this bullish trend line has been broken. You can see that the trend line, initially, price was being rejected at the trend line because the trend line was acting as a dynamic support. Then around this point, there was a breakout to the downside, and that showed that a bearish reversal is about to start. And you will notice that the horizontal resistance also held. So we had a confluence. We had confirmations around here. The horizontal resistance was a confirmation. The trend line breakout was a confirmation, in addition to the bearish signals given by the RSI. And you will notice that we also had a doji around here. And remember that a doji is a candlestick pattern that shows a state of indecision. And apart from the doji, we can see that we also had, a bearish candlestick pattern around here. A long wick at the top, and then a body at the bottom. It's looking like an inverted hammer, right? So you will notice that this bearish candlestick pattern was also a kind of a confirmation that this sell move is likely going to prevail. So basically, it is important to get your confirmations, all right? Get your confirmation from multiple tools, including your trend lines, your horizontal support and resistance levels, and you can also add moving average, okay, just for the purpose of confirmation. Let me just add a moving average to the chart so that we can also look at what the moving average told us, okay? Even though that the moving average signal came late, depending on the period though, okay, this is the 50 period EMA, but I'm just going to change it to 20. All right, see, this is the 30 minutes time frame. Yeah, this is the 30 minutes time frame. So let me just use the 20 period EMA. So we can see now that the 20 period EMA also gave us a signal around here, a breakout signal, okay, that a sell is about to commence. So that was an additional confirmation, okay? All these confirmations help you to filter out false signals and to improve your trade accuracy. Now, before we wrap up, let's just go over some common mistakes beginners make when using RSI. The first is entering trades just because RSI is overbought or oversold. RSI alone is not enough, okay? Always wait for confirmation with price action. Secondly, do not ignore the overall trend. In a strong uptrend, the RSI can actually stay overbought for a long time. So instead of shorting immediately, wait for a clear reversal signal. And finally, do not use the RSI on just one time frame. Always check higher time frames to confirm trends before entering a trade, okay? And that is it. Now you know how to use this simple RSI trading strategy for beginners to identify trading opportunities with better accuracy. If you found this video helpful, make sure to hit that like button and subscribe to the channel to stay updated with more trading strategies. Also, drop a comment below. Do you use RSI in your trading? What is your experience with it? Let us discuss in the comment section. In the meantime, keep learning, keep trading, and I hope to see you in the next video.